Hey, happy Friday out there to all my real estate agents involved with this email. I wanted to wish you a great weekend and to talk to you today a little bit about the Fed rate cuts, and only because I've been getting some questions here with regard to that and how that might affect the mortgage rates and the overall real estate markets coming up here towards the end of 2025. And so while consensus is that the Fed will probably cut rates a couple times in the next or throughout the next several months leading up to the end of the year. Keep this in mind. The Fed doesn't necessarily control mortgage rates, right? The Fed is the Fed lends money to other Federal Reserve banks, and that Fed funds rates controls variable rates. So for credit cards and for home equity lines of credit, that sort of thing. It does not necessarily play a role in long-term mortgage rates for mortgage financing, what are actually backed by what are called mortgage-backed securities. And so I get a lot of questions when the news starts coming out there that the Fed is going to drop rates, and how's that going to affect my mortgage? Can I refinance, and so forth and so on. Typically, long-term mortgage bonds kind of predict or try to predict the Fed moves, and they might start dropping a little bit before the Fed does that, but it doesn't necessarily coordinate all the time, 100% of the time. So while we do anticipate a couple Fed rate cuts over the next several months, whether or not that will affect long-term mortgage rates is still yet to be seen. Most experts are predicting that rates are going to stay kind of flat from where they're at right now throughout this year. But look for more significant cuts in the beginning of 2026, and that might help us also push down mortgage rates long term in 2026. Real fear right now being inflation, right? What inflation numbers are going to be doing? It's what they're calling sticky inflation. It's just kind of hanging on and hanging on and hanging on. The other consideration for mortgage rates are going to be the employment figures, just to see how tariffs and that will affect the overall economy. So inflation and employment is going to be the most important things to kind of keep an eye on moving forward to predict where mortgage rates might land. So if you get those questions, just wanted to give you that little bit of advice here for your clients. Keep in mind that the Fed does not control mortgage rates. That controls variable lines of credit, credit cards, and lines of credit, that sort of thing. But if you want more detailed information for your clients, feel free to send them my way. I'll be happy to chat with them. Hope you have a great weekend. Happy house hunting. We'll talk to you soon.